Ladies and gentlemen, good day and welcome to the Aptus Value Housing Q4 FY23 earnings conference call hosted by Dolat Capital. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference, please signal an operator by pressing star then 0 on your touchtone telephone. Please note that this conference is being recorded. I now hand the conference over to Ms. Mona Khetan from Dolat Capital. Thank you, and over to you, ma'am.
Thank you, Melissa. Good evening, everyone, and welcome to the earnings conference call of Aptus Value Housing Finance Limited to discuss its Q4 FY23 and yearly performance. We have with us the senior management from Aptus to share industry and business updates. I would now like to hand over to Mr. Anandan for his opening comments, post which we can open the floor for Q&A. Thank you, and over to you, sir.
Thank you, Mona. Good afternoon to all of you. Ladies and gentlemen, I am Anandan, Executive Chairman of the company. I welcome you all to the conference call to discuss the financial performance for the quarter ended and year ended March 23. I have with me Mr. P. Balaji, Managing Director, Mr. C.G. Manoharan, CBO, Chief Business Officer, and Mr. John Vijayan, CFO. The results and the investor presentations are available on the stock exchanges as well as our company website. I hope everyone had a chance to look at it. Aptus, as you are aware, believes in growth with the due importance in the quality of loan book and with good financial metrics. Very happy to record that Aptus had a healthy and good financial year FY23. It is reflected in our financial strong results. Sharp business focus, deep penetration in served markets, customer centricity have enabled the company to achieve good growth. Enhanced digital adoption in customer sourcing, underwriting, collection, and risk management also supported the business growth well. Total disbursements for the year stood at 2,394 crores, up by 46%. And our AUM, March 23, about 6,738 crores, healthy growth of over 30% YOY. With focused collection efforts, our collection efficiency have stabilized at over 100%, resulting in reduction in our soft bucket outstanding as well as overdues, NPAs in particular. Spread for the year was good at 14.3%, representing an increase of 65 basis points over FY22, despite, as you know, significant headwinds in interest rates. We have registered a consistent ROA of 8.44%, and our ROE has gone up to 16.34, up by 189 basis points YOY. This, as you must have observed, is one of the best in the industry. We also declared a total interim dividend of rupees 4 per share. The face value per share is 2 rupees, and the dividend declared is 4 rupees interim dividend. Our net worth stands at about 3,300 crores, which indicates robust capital adequacy. I'm also happy to share that the board has elevated Mr. P. Balaji as the Managing Director of the company. Further, Mr. Manoharan, who is in charge of the business development, has been elevated to the position of Chief Business Officer, and Mr. John, who is currently our Chief Risk Officer, has been promoted as the Chief Financial Officer of the company, CFO of the company. Also, the organization further strengthened senior middle management in the second level in sales, credit, technical, and finance functions to pursue the next level of growth. I would now hand over the line to Mr. P. Balaji, our Managing Director of the company. Thank you.
Thank you, sir. Good afternoon, friends. As on 31st March 23, the total live customers were over 107,000, which represented a growth of 28% year-on-year. The total number of branches as on 31st March were at 231. We had added 23 branches in FY23 and employee count was at 2,405. Major performance highlights were AUM grew by 30% year-on-year to 6,738 crores. Disbursements increased by 46% year-on-year to 2,394 crores. Spread was at 14.31%, 0.65% increase year-on-year. OPEX to assets were at 2.75%. PAT was at 503 crores, representing a growth of 36% year-on-year. ROA and ROE was at 8.44% and 16.34%. Now, as regards the asset quality, with focused collection efforts, 30 plus DPD improved to 5.9% in March 23. This was 9.91% as of March 22. Coupled with this, there is an improvement in our GNPA to 1.15% from 1.44% as of December 22. Net NPA was at 0.86%. Provision coverage maintained at 1.06% as on 31st March, up from 0.8% in March 22. We are carrying a total provision of 71 crores, and this, when computed as a percentage of NPA, works out to a coverage of 90%. Outstanding restructuring book were at nominal 0.7%, and the behavior of this book is on par with our normal book. As regards to borrowings, we have well-diversified borrowings with good support from NHB. Out of the total borrowings, 60% is from banks, 26% from NHB, 10% from DFIs like IFC and large financial institutions, and the balance is in the form of securitization. We enjoy a rating of AA- both from ICRA and CARE. We had sufficient on-balance sheet liquidity of 1,186 crores, including undrawn sanction of 625 crores from NHB and banks. As on 31st March 23, our net worth was at 3,300 crores. Thanks. And now with these remarks, I open the floor for the question and answer session.
Thank you, sir. Ladies and gentlemen, we will now begin the question and answer session. Anyone who wishes to ask a question may enter star and 1 on their touchtone telephone. If your questions have been answered and you wish to withdraw yourself from the queue, you may enter star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. To ask a question, you may enter star and 1. We have the first question from the line of Hiren Kumar Desai, an investor. Please go ahead.
Yeah, thank you for the opportunity. I have a couple of questions. The first one is, there is this discussion all the time about K-shaped recovery in the economy and lower income population, which is our customer base, is having a little bit of difficulty because of inflation and scars of COVID. Are we seeing anything in our book in terms of DPDs or anything else? That's my first question.
Yeah. We did have the impact of COVID visible in FY21 and 22, early part of 22. After that, during the last 12 months, there is consistent and very good improvement in collection. And we've been consistently collecting a little more than even 100% of the monthly billing, resulting in that our outstanding, both in terms of soft bucket and NPA, have come down significantly. And not only there is substantial improvement in collection and substantial reduction in the overdues, but our business also come back very well, resulting in significant growth in our business post-COVID. In fact, as you must have observed, in FY23, we had a growth of 48% in disbursements.
Yeah, thank you. Okay, that answers the first question. The second question is, our cost of funds will be rising with a little bit of a lag compared to repo hike, etc. assuming that our borrowings from banks mostly will be on MCLR benchmark.
Yeah.
Do you have an assessment as to at what number and around which month our blended cost of borrowing might peak out?
No, actually, there are a couple of reasons on our liability. We are very strong on our liability side, basically because our leverage is so low. On a balance sheet size of about 7,000 crores, close to about 3,300 crores is our net worth fund. Of the balance, 3,700 crores. Also, if you see, little over 2,000 crores are really long-term fixed interest rates, particularly from institutions like NHB. We have a borrowing about 1,000 crores loan from NHB. It's a 10-year money with a fixed interest rate. And the other aspect of the borrowing, the balance, of about 3,500 crores of the total 4,000. A little less than 4,000, as I mentioned, about fixed is about over 2,000 odd. The balance only even that is really long-term loan of 5 years and above. We don't have any short-term borrowings at all. We don't have any CP or short-term debenture or short-term working capital and things like that. So given that, we are really sort of, and some of these are really, in fact, even the MCLR linked to the 1-year MCLR rather than shorter duration MCLR. So to that extent, and what has happened in the month of December 21, we also got our credit rating, upgrade in credit rating. That also helped us to tie up the funding at a slightly lower cost. So all this has really resulted in a good control over our cost of funds. So much to say that while, as you are aware, the interest rates have gone up by 250 basis points, we have gone for a pricing correction of only 50 basis points, that too effective November 22. Despite significant headwinds on the interest situation, we are able to, and despite our ability to pass on, we have a good pricing power. Despite that, we have really gone for a very, very modest small price increase, and we are able to protect our margins. Our NIMs are really maintained. Our ROA is maintained.
Okay, just a follow-up. So do we have some more sanctions available to draw from NHB? Or we have used up it?
Yeah. See, we had a sanction of 500 crores sometime in December. Of that, we have drawn 300 crores as of March. And if you look at our investor presentations, we have around 625 crores of undrawn funds. Of that, 200 crores is still to be drawn from NHB. And after that, drawn from NHB. So that is the, yeah.
Okay, just one last small question. So what is the thought process behind giving the dividend? See, we are generating good ROE of 16 plus. And I am assuming that with improvement in leverage, the ROE will improve further. So when we are generating such good returns, what is the idea behind giving dividend?
No, the board has considered these aspects very carefully and deeply, and we thought in the it will be in the overall interest of all concerned, particularly the shareholders, and it is the company objective to further enhance our ROE. In fact, as you rightly said, our ROE has gone up in the current year by almost about 189 basis points, if I recall the number correctly.
Yeah.
It has moved up substantially, and and in fact, if you notice, this is possibly one of the best in the affordable housing finance companies, listed housing finance companies.
Yes.
And our objective is to take this further forward. So to that extent, the shareholders will get benefited more.
Okay, so in the same line, one last question, sir. So what is the maximum leverage that we are comfortable with? Right now, it's very, very low. So, like,
What do you mean by limit?
Leverage.
Leverage.
no, leverage means right now our leverage is like 1.2 debt to 1 equity kind of thing, right? So it's very low.
Now, you are right. Now, our objective is today to, with a good growth maintained in the coming years, we would want to be looking at a leverage of about 5 to 6 times.
You mean up to 5 to 6 times? We are quite comfortable.
Sorry.
Yeah. See, next year itself it won't reach to 5, 6 times, right? It will take a while to reach there.
Yes, considering the profits which we are generating, it will take a while to reach that 5 to 6 times level. So that's why we will not be able to come to the market for capital. We don't want to raise further capital.
No. That's fine. Okay, thank you, sir. That all answers all my questions.
Thank you. We have the next question from the line of Uday Pai from Investec. Please go ahead.
Hello. Thank you for taking my question. So just 2 questions from my side. First one would be that we saw a couple of management shuffles during the results. So is there any more changes to be expected in the near term, say 6 months, or it is well settled now? And the second question is, are you thinking of any yield increases in Q1 or Q2? A small increase of 20 bips or so?
We didn't get the second question.
Any increase in the yields? Are you expecting to increase the yields in Q1 or Q2?
No. Okay, got it. Now, as far as the first question is concerned, it is unlikely there will be any more senior management, changes or upgrades. Actually, present one also more of a really, promotions from within and to assume our responsibilities. And we don't expect to see anything happening in the, short term. And the first question. As far as the second question also, we don't really see any increase in our lending rates or need to increase our, interest rates. We are quite confident through higher disbursements and better cost control. We may not have to go for any more price increase.
Okay. Thank you, sir. That was it from my side.
Thank you. Participants, to ask a question, you may enter star and 1. We have the next question from the line of Amit Bhatt from MIT Engineers. Please go ahead.
Sir, under the able leadership of Mr. Anandan, company achieved many milestones. But sir, after the IPO, the stock is consistently underperforming, and even after 2 years, it is 30% below the IPO price. So, sir, because now Mr. Anandan also aging, so what is, succession plan for this company? And we heard that, some big NBFC is going to, merge your company. So can you throw some light? And another thing is, why we are not growth hungry? You got your IPO at a 55 PE. It means all were expecting more than 40% CAGR growth from your company, and you are not delivering, you are giving dividend. We don't want dividend, we want growth, we want, the price movement. Because most of the people asking questions, they are the retail investor. Most of the big guys, they are shy away from your company. Can you throw some light why it is happening?
As far as it is true that our market prices are lower than our IPO prices. And as you might recall, we came with an IPO sometime in July 21. And after that, we came out with 7 quarterly results, if I recall rightly, including the March 23. In all these 7 quarterly results, the performance of the company has been consistently good and very good. And we keep maintaining a very good growth rate in our disbursements, loan book, profits, return on assets, ROE, everything. So as far as the company is concerned, we continue to perform consistently well, in the last, 7 quarters. those results are being circulated in our website also. So as far as the company is concerned, it's trying its best to perform and grow much better. But when it comes to the market price, you know pretty well that there are a lot of other headwinds caused by the international situation or caused by the market situation. And to that extent, the risk associated with any equity investments, will be there. But we are very conscious and we are very committed to keep performing well and also keep communicating well to all the stakeholders as to the performance of the company is concerned.
Sir, what is the succession plan? Because you are now aging, sir, and only one news that Cholamandalam is coming, the actually stock increased by 20%. So market is giving you a clear signal that market want growth, market wants something new out of box from the management. You can't blame only the market condition. There are many NBFCs performing very well during this time in the price movement I am talking about. So sir, you please clear the succession plan. Include some good management people from outside also, or if you can't, then please merge with some bigger NBFC to fire, because when you bought the IPO promising 40% CAGR growth, now you are talking about that in future their growth is going to be 25 to 30%. So that market doesn't like, sir.
Now I take the point. Just on the succession plan, we have really we have worked on that, and in the last board meeting we had really taken some decisions, and that decisions what has been reflected in the form of in the investor presentation, and in fact what I in my opening remarks I did mention that there is Mr. Balaji has been now made as the managing director of the company, and we have really elevated Mr. Manogan to head as the Chief Marketing Officer, and we also made a CFO who's been very, very experienced in this area. So in other words, the succession plan is really being put in place, and it is presented in our investor communication, investor presentation which is there on our website. We have given clearly the entire management team and what are the new steps that are being taken to, from the point of view of succession plan, not only at the departmental head levels, the senior level, but even at the middle and senior management levels, in credit, in lending, everything. We have taken a lot of steps that we hope we are very positive will result in good continued growth in business as we have done in FY23.
Thanks a lot. Thanks a lot, sir.
Thank you. We have the next question from the line of Ankit Shah from White Equity. Please go ahead.
Thanks for taking my question. So my first question is on the competition. Companies like Aavas, etc., are offering loans to similar set of borrowers at much lower interest rates. I wanted to understand why the borrowers are preferring us versus them, and why would they not shift to competition?
Look, actually, you are right. There is competition, and not only from the existing players, but there are some newer players also emerging, and not only the players in the home loan finance segment, but some of the small finance banks also started entering into this home loan business, affordable home loans business in particular. So to that extent, yes, there is competition. But what we are really seeing is that given our strength in terms of distribution and a very deep presence, for example, of about 231 branches, we have 86 branches in Tamil Nadu, 86 branches in Andhra, 35 branches in Telangana, and 21 branches in Karnataka. In fact, in Tamil Nadu, if you see of the 86 branches, literally at 70-80 kilometers, every 70-80 kilometers, we will have a branch. So in other words, our corporate coverage is one of the best, and which gives an opportunity to be closer to the customer in terms of reaping in terms of originating the new business, and also, quickly provide the turnaround time and provide the best service as possible to our existing customers, who in turn refer new customers to us. So given this approach, we are able to really, the fact that even FY23, we had really, our disbursements grown by 48%, indicates that despite the competition, we have strength to, grow, given our very deep commitment and closeness to the customers.
Right. So one follow-up on this. Over next 3 to 5 years, given assuming that interest rates don't move much from here, do you see our yields trending lower, or you see the yields remaining around these levels?
No, our lending rates will be around this level. In fact, in the last 10, 12 years, if you look at it, we had not really gone for any lending rate increase at all, barring the small increase that we did in November, only 50 basis points against an interest rate increase of 250 basis points. We have gone for a very small increase. Barring that, we are able to maintain the same lending rates almost over 10 years now. But what we really do is that, the efficiency, the financial performance, the financial metrics, we have one of the best financial metrics that we are able to obtain through better productivity, lower operating costs, and lower credit costs, higher productivity of our branches and our staff. So in other words, we are a very frugal organization, and both the volume growth and cost control helps us to maintain this kind of pricing.
Got it. The next question is on the statutory auditor. Sir, would it be possible for you to give us some sense of why, we shifted out from a Big Four firm to, some other auditor last year?
No, actually, we, right from the beginning, we started with Deloitte, and first 11 years, so 10, 11 years, we had one of the Big Four only. But consequent to the decision in terms of the number of audits being sort of restricted to the Big Four, and given our current size, we had to really look for, an alternate auditor to the Big Four. And the current auditor also is one of the very well-known, established. In fact, they are really auditing about, if I recall, 3-4 home loan companies, including a home loan company part of Tata Group itself, if I recall correctly. So in other words, so they are very well experienced in the home loan businesses, and they are an established audit firm with particular exposure to the home loan finance law.
All right. Thank you. Sir, last one from my side. So the difference between the AUM and the advances, is it only the securitization, or is there something else also? So this 146 crore difference is only securitization?
No. Under Ind AS, what happens is the gross loan book gets deducted by the provisions which we carry, and the processing fees which get deferred for recognition of income because of the Ind AS. So those are some of the things which has got adjusted with the AUM which we are reporting of 6,738 crores.
Okay. Got it. That's it from my side. I'll join back the queue. Thank you.
Yeah.
Thank you. Participants, if you have a question, you may enter star and 1. The next question is from the line of Vinish Bhuye, an investor. Please go ahead.
Yeah, hi, this is Renish from ICICI Securities. So just 2 questions. So one is on this our geographical concentration. So sir, Karnataka exposure is actually coming down, on yearly basis. It went down to 8% in FY23 from FY20. Though, in our various commentary, we have been mentioning that Karnataka is our focused state. So just wanted to understand what is happening in Karnataka specifically.
No, see, basically, I think at a macro level, we've been consistently presenting, explaining to the investors and analysts that we are not really sort of our strategy has been one of deeper presence in wherever we operate, market leadership wherever we operate, rather than very thinly spread out our branch right across the country and call ourselves as a all India lending company. Now, flowing out of the basic strategy is that what we have really reached a very good corporate coverage in terms of and business participation in Tamil Nadu, now in Andhra, and Telangana and Karnataka. We are following, in fact, in the current year, our focus is going to be only in Telangana and Karnataka, whereas in Andhra and Tamil Nadu, we have 86 branches in each state. Our corporate coverage is one of the best and one of the highest. That provides us opportunity to almost be the market leader in affordable housing finance companies in the state, in these states. But our current year, our focus is going to be in Telangana and Karnataka, and we see good opportunity grow these markets also as we have grown in Tamil Nadu and Andhra. And not only that, as part of our geographical diversification, we've also looked at the states contiguous to our present. That's where we have really commenced on a pilot project, two branches in Orissa, and we are planning to add another 2-3 branches in the coming quarters itself. And we are also planning to add a few pilot project basis branches in Maharashtra as well. So these things will happen progressively, but wherever we are very clear, wherever we operate, we will operate with lot more deeper, with lot more intensity, lot more closeness to the customer, and we would want to be market leader in that particular state, wherever we operate.
Got it. And so my next question is again on a sort of sustainable yield side. So presently in our customer mix side, we are having almost 30% of new to credit customer, wherein would be able to charge a little higher given no credit history. But as we move along, with scale, maybe this the share of new to credit will come down, and where the yield would be again lower. So, sir, maybe from a medium-term perspective, what sort of sustainable yield you guys are looking at internally?
No, see, basically, if you really look at our investor presentation, very clearly there are two components. One is really about, let's say, 7,000 crores loan book. About 1,000 crores is from really the SME customers, where we charge 21%. And that is a market rate being charged by maybe 5 others, 6 others, 7 other players as well. So we are not really charging anything more than what being charged by the market who are really providing the funds for this category of the SME customers. I can name the 6, 7 of them also. Now, the other is as per the 7, 1,000 is the about balance 6,000 crores is really the home loan and home loan equity, where our average lending rate works out to around 14.5 to 15.5%. In fact, after the last 12 to 18 months price increase because of the interest increase, the gap between us and our competitors have really come down actually. In fact, they have really moved up to 13.5 to 14, and we may be 0.5% or 1%, a little less than 1% more. And for the kind of service that we provide, because these are very small size loans, an average size loan of less than 10 lakhs to be collected over a 15-year period involves certain transaction costs, involves certain service costs. So given that, these are well accepted by our customers also, which is reflected in the form of our loan transfer to other large housing companies or banks is hardly less than 3%. So in other words, our entire pre-closures, what we call the loan pre-closures, is around 8%. Of the 8%, 5% comes from customer-owned money. They have not taken any loan from anybody to pay off our outstanding loans. The actual loan transfer to other banks, other HFCs is only about 3%.
Got it.
So the fact that our interest rates that way has been sort of well accepted, and it is really related to the market situation, given the nature of this customer, given the nature of the operating costs in this segment.
Got it, sir. Okay. So fair to assume that the current yield is more or less sustainable, at least in near term?
Yes, Ganesh.
Okay. That's it from my side, sir. Thank you.
Thank you. We have the next question from the line of Manoj Oberoi from Yes Securities. Please go ahead.
Yeah, sir. Hi, this is Rajiv. Congratulations on a very good set of numbers. I have a few questions. Sir, firstly, this sharp jump in small business loan book on a Q-on-Q basis. This book was pretty steady in the preceding quarters, and in this quarter we have seen a sudden big jump. What has driven this?
So basically, recall, because of the COVID, the impact on SME we found is a lot more harsher than the home loan customers. Given that we have really gone very consciously, we have gone slow in lending to the SME customers till about almost 6 to 12 months back. In fact, now after that, we see there is a significant change and improvement, and we really passed through. We seem to have left behind the COVID impact, and we are seeing that now the customers are coming back to normal in terms of their demand for loans and also the repayment culture, more importantly. And given that we have really now activated, this SME lending, because we do see the SME segment as an important segment going forward for this company. In fact, we are also planning, from the future point of view, future growth point of view, like our affordable home loans, we will be focusing on the SME segment also going forward, specifically branch by branch and state by state. So, we see that as a good segment to be pursued in future as well.
Sir, the ticket size average will be what in the future? Currently, it's contributing 21%. How higher can it reach as a proportion of AUM?
As a proportion of AUM, it will still be maintained between 21 to 23% on the consolidated book. And the yield is likely to be maintained at 21%, because if you look at the competitors, they are charging slightly more than what we are charging. So I think this yield which we are charging, which is at 21%, is sustainable for many years to come.
Now, I was checking on the ticket size as well. If you can tell me what is the average ticket size?
Actually, ticket size for the SME is average around 7 lakhs, and the tenor also is about 7 years.
Got it. Yeah. And sir, over the last 3-4 quarters, how has the disbursement average ticket size moved in home loan? Has it been similar or? Yeah.
Despite the inflation, interest rate increase and inflation, our average size is around 8 to 9 lakhs rupees only. It has not really moved up high. Whatever increase in our disbursements, 40 to 48% disbursement growth, came mainly because number of loans rather than the average ticket size moving up. Basically, we find a couple of reasons. One is that as we open more branches, as we go more deeper into the geographies from the district level to taluk level, we find the average loan size also is slightly lower in the deeper markets than in the suburbs of, let's say, metros or the bigger towns and things like that. That's one. Second thing is that we are very, very conscious in our credit underwriting in terms of income installment ratio. So while because of the inflation, the cost of construction would have gone up a bit, but we also have to look at it from the point of view of income installment ratio as well.
Got it. And
sorry
question.
to interrupt. This is the operator. So we have participants waiting in queue. Would you be able to come back with your questions?
Yeah, just one last question, then I'll come back. Sir, on post the rating upgrade, what has been the extent of reduction you've seen on the credit spread being charged by the banks over the MCLR, the credit spreads which they were charging?
On the fresh borrowings, we were able to secure a savings of around 0.25 to 0.5%.
That's a benefit.
On the banks and the negotiations which we are doing. So that is one thing which we have got. And tenor is normally 6 to 7 years we are getting from the banks.
Okay. Thank you. Welcome.
Yeah.
Thank you. We have the next question from the line of Kunal Shah from Citigroup. Please go ahead.
Yeah. Thanks for taking the question. So, Mr. Anand, now maybe earlier your reappointment was maybe you were there till 24th December 2024. So if you have to look over here, maybe as an executive chairman, would you be continuing till that date, because it doesn't mention in terms of maybe for what period? And will it be like the transitioning with Mr. Balaji over next 1.5 years? How should we look at this? Yeah.
Yeah, actually, thank you. My current employment contract is approved by the board and the shareholders for 5-year period commenced from 19 to 24 December 24. So I think December 24th and year 24 as well. It is our entire. I will continue till my intention is to continue and support the company till December 24, till completion of my tenure. And to that extent, both I and Balaji will be working together. Yes.
Great. Yeah, that's very helpful. And secondly, in terms of maybe the branch expansion which you have highlighted. So when we look at it, what could be the extent of presence which we are planning to have, say, in Orissa, Maharashtra, as well as Telangana compared to where we are today? Because generally we are seeing maybe in the mature markets around about say 85, 90 odd branches. And given that at least Maharashtra and Telangana would have equal potential, where would we want to reach in terms of the deepening the presence? Yeah.
Yeah. See, last year we have opened 23 branches. This year we are planning to open at least 30 branches. Of that, three more branches, as was stated earlier, will be in Orissa and 2 or 3 will be in Maharashtra. And the balance will come in either Telangana and Karnataka, because that's going to be our focus states where we will be growing, because Tamil Nadu and Andhra Pradesh, we already have 86 branches each, and they are contributing. They will always contribute to the growth. So basically, the other maybe 24 branches will come in mostly in Telangana and Karnataka.
Okay. And in terms of the employee cost, so obviously that was higher. If you can just highlight in terms of maybe any annual incentives, one-off, which could have been there, the extent which is there, and what could be the normalized run rate over there?
See, if you look at the Q-on-Q employee cost increase, it's basically there are 2 reasons why it got slightly increased. One is we had added more branches, so because of that more employees came in, and because of that cost added up. Plus, because of the increase in the volumes, we had to provide for a higher incentives, and that is what is getting reflected in the salary cost. And I think I answered the question, or you want I don't think I can give a guidance on that, because obviously it will be 5 to 10% increase in the salary cost can be assumed.
Yeah, no, because overall in terms of the growth, it was very much in line with the guided range of 30-odd%. So maybe the additional incentives for a higher volume. So yeah, so that was the only question in terms of, I think we have been guiding say in that range, and the number was also similar.
Yeah. One other element is that we've been making certain investments in strengthening our middle and middle management category in terms of managers and senior managers. As I mentioned in the beginning, in functions like sales, credit, and and collections and things like that. Consciously, we are really preparing for the next level of growth. And to that extent, we have really gone for both by numbers and more importantly by the quality and seniority. We have really strengthened our middle management significantly in the last 6 months or so.
Okay. Got that. Okay. Yeah. Thanks a lot.
Thank you. We have the next question from the line of Siddharth Jain, an investor. Please go ahead. Mr. Siddharth Jain, please go ahead.
Hi. So just wanted to check on the NPA thing. The 30 plus that we see in the presentation has gone down from say 6.27 in December 22 to 5.9 in March 23. However, the reduction in NPA, in correspondence to that, has also been significant. So if you can guide, the differential between the two.
No, I didn't get your number question. What is it? The NPA is reduced from 1.19 last year to 1.15 now. And last year it was 8.72% stage 2. It has come down to 4.75% as of now.
So basically the point is that, the 30 plus DPD is 5.9%. However, the NPA is 1.15%. So, the differential between the two is slightly higher as compared to the competition. So just wanted to understand, is it because of the bloating in the middle buckets or what is the reason for that?
If you look at it, in the last year also because of the COVID, like all other companies, we also got affected. And we had given a lesser moratorium as compared to other companies at that point of time, which RBI had announced. Because of that, the DPD fees which was available for the other companies was not available to us, and with the result that the stage 2 assets slightly ballooned. That's what is reflected, and as on 31st March 22, it was at around 8.72%. So the efforts are on now to reduce that from 8.72 to our pre-COVID levels of around 4 to 5%. So that's what is the directionally happening. And from 8.72, it is gone down to 4.75% on the stage 2. It will further come down.
Understood. Thank you. Any guidance on the future numbers?
It's slightly difficult to predict because the efforts are on, and it is for these kind of customers. What happens is paying one EMI is easy, but if you are asking them to pay 2 or 3 EMIs at one point of time, it becomes difficult. So our endeavor is to bring this down to 4%. So hopefully we'll be.
Overall, our NPA, we are really working towards an NPA of around 1%. That is 90 plus. And we're also working towards, stage 1 of at least about 96%, around 96%, stage 1. So the balance 4 to 5% will be there in 60 to 90 and above 90 also. And we are progressing very well in that direction.
Okay, that helps. Thank you.
Thank you. We have the next question from the line of Ankit Bansal from AD India. Please go ahead.
Hello.
Yes,
Ankit.
Thank you. Sir, congratulations on good set of number and for the whole year. So my question is, like RBI is pausing the interest rate. Sir, will be able to see the credit cost decreasing, and what is your future rate of interest are you taking? How is it planned for year 24, 25? What are the, can you please explain on this?
You are talking on the yields or you are talking on the borrowing cost?
Borrowing cost.
Yeah, with the interest rate now, we have already noticed, all of us have noticed that the 10-year paper, G-Sec paper, there is softening of interest rates by 5, 10, 15 basis points and all. So at least the increased interest environment seems to be possibly, I won't say use the word behind, but at least the pause is very much there. So the increase in interest rate situation possibly is not there, but definitely the softening will happen maybe over a period of time related to the inflation, as you are aware. But then, as far as our pricing policy is concerned, that we normally, while this reduction, if any, in interest rate will benefit us, at best we will pass on that to our variable contracts. And the fixed contract also, normally we will get the benefit as whatever interest rates that is coming down. On the fixed contract, we will get the benefit, but in the variable, we will possibly pass on whatever the reduction is.
Okay. So, what will be the future growth areas of growth that will drive the company into higher levels? Are there any plans of converting from housing company to a bank? I mean, for a plan of 20 years, 15 to 20 years. Is there any plan or just sticking to a housing company?
No, actually, I won't be able to, I don't know when people will be able to really talk of 15, 20 years, sorry. But then definitely in the immediate term, there is no plan at all for the company to really get into any unrelated financial services activities, including banks. We'll say unrelated, where bank is a totally different animal, as you are aware. Our focus will continue to be in home loans, and our focus will also be in SME, to the same profile of our customers, who are really largely informal, Tier 3, Tier 4, self-employed, against, their essential property. So we will continue to be largely in the secured loans, and will continue to be largely in the home loans, affordable home loans, and will continue to be and maybe enhance a bit on our SME. And we'll continue enhance our presence with a deeper penetration in our existing branches and seek for new branches, but in the adjacent states as we grow further. So our growth will be largely around home loan and the SME loans, and our growth will be largely around deeper penetration in geographically.
Okay, thank you, sir. Future के लिए आपको बहुत congratulations, and hope your investor will grow also with the company.
Yeah, thank you.
Thank you. We have the next question from the line of Mona Ketan. Please go ahead.
Yeah, hi sir, good evening. So, firstly, on the cost of fund side, assuming that there are no further rate hikes, what sort of rise in cost of funds could we expect this fiscal? And also, do we have any high cost debt maturing in this fiscal?
Yeah, there is around 100 to 150 crores of high cost debt getting matured, so that will get replaced with a lesser cost of funds borrowings. That will happen in the second quarter, beginning of the second quarter, July. Okay. Then, as regards as you know, the total borrowing, we have almost 60% of the borrowings as a fixed rate borrowing. So there will not be any change on that. And whatever is the one which is related to the variable rate, which is linked to the 1 year MCLR, all the whatever is the increase that has happened, that has to happen, has already happened. So it will, if an increase if there is a reduction in the MCLR that is going to happen, that benefit will come in the third quarter and fourth quarter of this financial year. Yeah.
Okay. And incrementally, at what rates are we borrowing from banks?
Currently, it is at 8 to 8.2, and currently, I mean, we have not drawn some of the funds because we are anticipating a lesser interest rate, so we are still negotiating with the bank. Yeah. The last drawn rate was at 8%. Without considering NHB, obviously.
Right. And as far as your customers are concerned, it's fair to say that they've not gone through any EMI increase so far.
Yes. Not much. Only as I mentioned, we have gone for a small 50 basis point increase in our EMI from November. That is only for the variable contracts, which is around 23% of our portfolio.
No, actually, there is only tenor increase. We are not gone for an EMI.
Okay.
Right. Okay, got it. And somewhere in the opening remarks, you mentioned about strengthening the middle management as well. So if you could highlight if there are any specific changes that have happened around that.
Yeah, let's say our sales and marketing organization, our entire business development, business sourcing department, the hierarchy is really, we have the branches, we have the cluster managers, and we have the area managers, and then area managers reporting into Mr. Manohar, who is the Chief Business Officer. What we have done is that to really strengthen, we have really gone for state head level positions. In other words, for the 4 states now, we've decided to go for a state head. For example, now we have a person to head the Tamil Nadu state, another person to head the Andhra. Of course, we have divided into one is the coastal Andhra, second is the Rayalaseema. For coastal Andhra, we already have a person in place, and Telangana we have a person in place, and even the Rayalaseema and Karnataka, we have identified the person. And so, in other words, we brought in under Mr. Manohar, who is our Chief Business Officer, 4 state heads, in fact 5 state heads, to drive the business and to be closer to every branches. Also, what we have done is that through larger training and exposure, we have really strengthened our the branch managers and the area managers. And we've given the other geographical, issues, wherever is required, we have added a few more we have totally around 54 cluster managers, which we have added another 5, 6 to have a better person's business, not only disbursement but collections as well. So in other words, if you really look at the entire sales and marketing, we really, strengthened in a way that, it can function well and be able to pursue, good growth. Similar steps we have taken on the credit as well. For example, in, HO central office, we have about 30 and odd credit officers who are really approving all the credit files. We had gone for a state-wise and product-wise like SME home loan, and we have strengthened the entire team. So similar has been done for the collection area and in the collection area as well.
Got it. So that was useful. Thank you. And since we are running out of time, we'll just close the call as well. Thank you everyone for joining us today, and thank you to the management for this opportunity to host the call. Sir, over to you for any closing comments you may have.
Thank you, Mona. Thank you, Mona, and for organizing the call. I would like to pay my sincere gratitude to all the analysts and investors friends who have taken time out in their busy schedule to listen to us today. Please feel free to connect with us in case you have any further questions. We would be happy to get back to you. Thank you.
Thank you, members of the management. Ladies and gentlemen, on behalf of Dolat Capital, that concludes this conference. Thank you for joining us, and you may now disconnect your lines. Thank you.